Rates have gone up recently, and right now refinancing is not really top of mind for most folks. But sometime very, very soon, they will come back down, and you don't want to miss the bus on lower rates again. So now is the time to start thinking about it. Before you jump in, however, it is crucial to understand the step-by-step process so you know what to expect and how to make the best financial decision for your home when the time comes. So whether you're looking to lower your monthly payments, tap into your home's equity, or even just want to know how it all works to better serve your real estate clients, today we're going to walk through the entire refinancing process, breaking it all down so you can feel comfortable and informed every step of the way. So let's get to it. Step number one, assess your financial situation. This just means take a close look at your credit score, your debt to income ratio, and how much equity that you have in your home. You see, your credit score plays a huge role in the rates and the loans that you'll qualify for. Generally, lenders offer the best rates to homeowners with a score of 700 or higher. But even if your score is lower, there may still be good options available. FHA loans and VA loans don't penalize as much for lower credit scores when it comes to interest rates, but they do come with their own refinancing downsides, like forever mortgage insurance and funding fees. Now, your debt to income ratio evaluates how much money that you make on a monthly basis, and it's calculated a little differently depending on your job and how you get paid, and how it compares to your monthly payment obligations as reported on your credit report. You see, things like car insurance and utility bills aren't generally considered as part of your debt to income ratio in most cases. And even though you qualified for your loan when you bought your home, if your income has changed or your debt has gone up, you might not be eligible to refinance even if you haven't ever missed a payment. Unless, of course, you do a streamline. Check out my video in the description for information on that. And the third piece of this assessment, how much is your home worth compared to what you currently owe? This is otherwise known as your loan to value. You see, if your home's appreciated in value since you bought it, then you might be in a great position to refinance, because the more equity that you have in your home, the better refinancing terms that you'll often qualify for, because a lower loan to value ratio can signal less risk to lenders. Plus, the more equity you have, the less likely that you're going to have to come out of pocket to do the refinance. But a little more on that later. Step number two, shopping for lenders and rates. Now, once you know your financial standing, the next step is to shop for the best terms for your loan. And notice I didn't say the best rate, because terms include not only the interest rate, but the cost to get that rate and do that loan. Now, don't just accept the first offer that you get. Calling around and talking to other lenders could not only save you thousands over the life of your loan, but also hours and hours of headaches and stress dealing with some internet lender who doesn't call you back, changes the terms on you every time you talk to them, and ultimately doesn't put you into the best loan terms for your personal situation. And oh, by the way, the bank that you currently have your loan with is typically not the best place to start. You can always call them once you've talked to a few other lenders, but those banks typically specialize in servicing your loan, not finding the best loan for your particular situation when it comes time to refinance. Now, while rates are the ultimate measure of the deal that you're getting, it isn't the only consideration. Talk to the lender and make sure that your gut feels good about dealing with that human being. Because, as my favorite country singer Sturgill Simpson once said, if there's any doubt, then there is no doubt. The gut don't ever lie. And the only word that you'll ever need to know in life is why. Love that dude. Oh, and if you don't know where to start in looking and trying to find a good lender, here's a tip from Mike. Ask your local realtor. They know them all. The good, the bad, and the ugly. And they'll have great recommendations for you in your search. Step number three, applying for the loan. So once you found the right lender and terms, it's time to apply for the loan. And another mic tip here, if the lenders that you talk to in your search can't or won't quote you some idea of the rate and terms that you're going to get based on just speaking with you, or at least until you fill out the application, then that lender ain't the one. Anybody that knows this business can chat with you on the phone, find out about your current situation, and give you a ballpark idea of what to expect. But when it comes to the application process for refinancing, it's very similar to what you did when you bought your house. You're typically going to need your most recent tax returns, pay stubs, home insurance information, copies of your IDs, and really you need some details about your current mortgage, like your most recent mortgage statement, because having these documents ready to go is going to make the process go fast and smooth. And right now they say on average it takes about 30 to 45 days to close a refinance. I would argue that you can typically get them done within about 3 to 4 weeks, and even faster in some cases. So if you're aiming to get access to that equity or or even reduce your monthly payments before a certain time, like say before the holidays, it's important to start as soon as you can. Step number 4, loan processing and underwriting. So during the loan processing phase, the lender is going to verify all your financial information through a process called underwriting. This is where your credit, income, and home appraisal, if you need one, are going to come under review. The lender's underwriting team is going to assess all the risks of refinancing your loan based on the type of loan that you applied for. And they're going to determine if your financial situation, including your credit and income, qualifies you for the refinance. Another mic tip here. If you have a good loan officer who walks you through all of this in the beginning and knows their stuff, underwriting is really nothing more than a formality because all of this will have been established and handled ahead of time. Also, side note on the appraisal. So many refinances are going to require a new home appraisal to confirm your property's current value. This is just part of the process because the appraisal is crucial and it can impact the loan amount you qualify for, especially if your home's value has increased or decreased since you first bought it. However, in some cases, you can get the appraisal requirement waived, and it often depends on how much you owe on your home and what type of loan that you're applying for, like a streamlined refinance, for example. Again, link to streamlined refinances in the description. And finally, step number 5, closing the loan. Once your loan's approved, the final step is closing. This is where you're going to sign all your paperwork and pay off that old loan to start the new one. Now, you can expect closing costs are going to range somewhere between probably 3 to 5% of your loan amount. And these costs are going to include things like appraisal fees, title insurance, and origination fees from the lender. Now, many lenders allow you to roll these costs into your loan depending on your equity position. And that goes back to the whole LTV discussion. But keep in mind, this will increase your overall loan amount and the payment because you are financing these costs. Now, after closing, there's going to be a 3-day right of rescission if you're refinancing your primary residence. This means that you can cancel the refinance even after you sign everything within 3 days if you change your mind for any reason. So just be sure to review everything very carefully. Oh, and the good news is after the refinance, you're going to get to skip one mortgage payment and not have to pay it for that month. And if you time it right and talk to your lender about it, sometimes you can skip 2. So be sure to ask them about that as well. Okay, that's it. Refinancing can seem like a very long and complex process, but when you break it down step by step, it becomes very, very manageable and simple. Whether you're assessing your financial situation or closing on the loan, understanding each phase is going to help you and your clients make smarter financial decisions when the time comes. And if you're thinking about refinancing or want some personalized advice on the process, don't hesitate to reach out. I am here to help in any way that I can because with the right strategy and timing, refinancing could save you thousands of dollars and help you better manage your finances and your mortgage. So give me a call. Let's talk about all your options so you are ready when those rates finally come back down, which they will.